Hi guys, welcome back to Pristine Gaze. So in today's video we'll be looking at Northland Power Incorporated and which trades with the ticker symbol of NPI on the Toronto Stock Exchange. So Northland Power basically has been operating in the energy and power segments for a very long time, and actually since 1987. So it has established a strong presence in the utilities market, and particularly the energy and electricity market. And although the company has traditionally relied on more traditional sources of energy such as natural gas, oil, and some other sources, but more recently it has been focusing on diversifying and expanding its capacity into its renewables portfolio, which actually provides a very strong rational and strong investment thesis for this company, as the energy requirements continue to grow globally, and this company is actually very well positioned to capitalize on this growing demand. So let's start our analysis by looking at the company's financials, and we'll be starting by looking at the company's financial performance over the past few quarters, or the first couple of quarters of the fiscal year 2024, with the second quarter of the financial year ending on 30 June 2024, which actually marked the half year period for the fiscal year as well. So as we can see, the company has actually delivered first half earnings of around 325 million or something around that range, and which actually remains a very stark contrast to the company's losses of around 175 million over the past year alone. So the fact that the company has been profitable in itself remains a very positive note for the investors and for the shareholders, as it signifies that despite the company generating a significant amount of losses of 175 million during 2023, the recovery has been very quick, and the company is expected to sustain this profitability over the coming years. So this actually remains a very good news. But the fact that the company's earnings have been around 246 million for the second quarter of 2024 remains actually very commendable, because as we can see in the chart on the video, we can see that the company has rarely ever managed to reach those levels of earnings within a single quarter alone. So let's take a deep dive in the company's financials and see if this growth is driven by operational factors or some other factors. As we can see here that the company has been experiencing significant amount of losses from its non-operating income, which is usually allotted to interest expenses or other financial expenses, and often expenses from losses or gains on investments, or losses from divestitures or something along the lines, which does not incorporate the company's regular operational structure. So as we can see here that the company actually generated around 273 million of non-operating losses during the fourth quarter of 2023, which remains a very significant amount, and actually ate away all of the company's profitability during that quarter, which was, the operating income was around 215 million and the non-operating losses itself were 273 million. So as a result, the company generated losses of 57 million during that quarter, and this, along with the fact that the company's overall financials had been weak over the past few quarters as well, or the entirety of 2023, you could say. So driven by these factors, the year was actually pretty negative for the company. And however, if we look at the company's financial performances during the first and second quarters of 2024, you can see that the company has actually delivered a very strong revenue growth rate during the first quarter of 2024, in which the Year-on-year quarterly growth rate was around 21.42%, while during the second quarter of 2024 the year-on-year quarterly revenue growth rate was around 12%, which both in the double digit range and provides a lot of confidence over the company sustaining this revenue growth trajectory uh, during the rest of the fiscal year 2024. And another positive sign is that the company has delivered a quarterly year-on-year growth rate of over 40% in both the first and second quarters of 2024 in its operating income. And as we can see on the screen, that the company has actually generated an operating income of 385 million during the first quarter and 147 million during the second quarter. And although the first quarter performances were somewhat hindered by again non-operating expenditures or losses, which kind of ate away the company's profitability again, along with some other hefty tax expenditures, as we can see here, that the company bore around 80 million of tax expenditures during the year, which is a very huge increase compared to the previous years, as you can see on the screen. So this actually ate away the company's profitability during the first half, despite it generating a very strong operating year during a very strong operating quarter. But despite that, the company was able to deliver a net income of 75 million, which in itself remains very strong and actually up almost 8% year on year. But more significantly, during the second quarter of 2024, we can see that the company has not only delivered its earnings from an operational level but that of a non-operational level as well, because the company has delivered a 49% year-on-year quarterly growth rate during the quarterly earnings growth rate during the second quarter of 2024. However, 71 million of non-operating profits driven by probably divestitures or some other non-operating income. So this resulted in a significant growth from 147 million to 218 million for the company during the quarter, and in the end it just lifted the overall quarterly performances for the initial two quarters of 2024 for the company, and lifting the overall first half performances as well. And this earnings of 325 million during the first half of 2024 actually showcases a very strong prospect for, although not a complete recovery, but a very close recovery to its levels back in 2022, at which point the company actually traded at a very promising price, which was around 41 to 45 compared to the company's current trading price of around $22. So this actually provides scope for a very strong upside for the company, for the shareholders and the investors, especially considering the fact that the company has already exceeded its revenue levels as well as earning levels compared to 2021, 2020 and 2019 as well, within a half year period. And its full year earnings is of course going to be a lot superior compared to these years, and this actually provides a very strong upside for the security over the medium to long term, as its valuation ratios, which must have declined very significantly over the past year owing to the stock price decline as well as the company's financial growth rate over the past month. So let's take a quick look at the company's dividend profile. So as we can see on the screen, the company actually maintains a very strong and very consistent dividend profile, although not growing, but this provides a very strong reliability and strong predictability over the fact that the company will continue these dividend payments over the coming year, which actually stands at around 1.2 Canadian dollars per share annually and distributed on a monthly basis, which brings the monthly distributions to around 10 cents per share. And these distributions are of course expected to continue over the coming year and have been continuing in 2023, a year during which the company generated some considerable losses, as well as in 2024. And as we can probably predict that this rate will continue at least over the next couple of years. And while the company's growth prospects, and beyond this even, the company's growth prospects may encourage the board to increase its dividend payments over the long term, maybe within a period of 5 to 7 years or so, as the company's expansion projects come into fruition and the company is able to capitalize on its massive expansion into its renewables portfolio. So these facts provide some prospects for the company's dividend profile to grow, or the distributions to grow over the long term. But over the next couple of years at least, we can expect the dividend payments to remain consistent at around 1.2 Canadian dollar per share annually. And although the dividend yield had kind of declined over the past few years and actually went as low as 2.63% in 2020, it has since been lifting by a significant margin, and especially in 2022, where the company's dividend yield went up from 3.16% in 2021 to a significant 3.23% in 2022 and yet again to 4.99% in 2023. And even beyond this point, as the stock prices have continued to decline, the company's dividend yield has actually become a lot more stronger for the investors at this point, and it currently stands at 5.49% and is expected to remain the same for investors who take an entry at this point over the coming years as well. So now let's just take a quick look at the company's investor presentation, the most recent investor presentation, which was actually published in September 2024. So we can just get a quick idea of what the company is planning to do over the coming years, or what its growth drivers or growth plans exactly are over the medium term, over the long term. And it kind of gives a very it provides some insightful details over the company's operational plans, which may or may not impact your investment decision. So as we can see, a major factor here in the company's presentation is that the company actually has a major pipeline of expansion projects under construction, and this provides us a kind of a glimpse or some details over what those expansion projects really are. And one of them is actually a battery storage project in Canada, which is expected to be in full commercial operation by 2025, which is actually within the next year itself. And moving on to some more promising projects, we have the Baltic Power project in Poland, which is an offshore wind project of about 1.1 gigawatts, and this project is expected to be fully operational by 2026. And similar to this, the company also has another offshore wind project in Taiwan, which is expected to be fully operational by 2026-2027. So all in all, over the next 2-3 years, the company has some very promising plans for capacity expansion, and the company is actually planning to spend around $16 billion on construction for these projects alone, which remains very promising towards its capacity expansion and the prospects for the company to sustain its revenue levels over the next couple of years, or actually over the long term as well, while also delivering significant sales and revenue expansion during this time frame. So all in all, the company's prospects for business growth over the long term remains very promising, owing to the strong energy requirements globally and in the 6 countries the company operates in, which is actually Poland, South Korea, Scotland, Canada, USA, and Colombia. So this is actually a very diversified presence across multiple geographies across the globe, ranging from Europe to Asia to North America, South America, etc. And the company's diversification across segments also remains promising, as it has a presence in onshore renewables, natural gas and utilities, as well as offshore wind. So heavy presence in the renewable segments, as well as strong presence in the traditional energy sources such as natural gas. So anyway, the company's construction activities also remain on track, and it actually continues to advance very swiftly across three very significant and very promising projects. So that provides a very positive outlook towards the company's operations over the short term as well as the long term. So let's take a look at some of the technical parameters and the technical indicators for the company as well. So as we can see on the weekly chart, the company is actually testing its short-term 14-day EMAs, and surpassing this would actually, if not confirm, but actually signify the commencement of a potentially promising upward trend for the security, and especially with the company being backed with solid fundamental and financial factors, it is expected to actually break through both its short-term and medium-term EMAs and potentially deliver a trend reversal over the short to medium term after a considerable decline over the past couple of years driven by poor financial and earnings performances. However, the earnings recovery over the first half of 2024 remains very promising and can actually support an uptrend for the security. As we can see, the company has also rebounded from its lower Bollinger Bands about twice during this year in 2024, and the decreasing magnitude of the decline towards the lower Bollinger Bands, like the company actually touched the lower Bollinger Bands during early September or late August, but this time around the company failed to touch the lower Bollinger Bands but actually kind of rebounded from a level above it, and this level actually stands at $21.16, which also remains the next Fibonacci retracement levels for the security, and that actually provides a very limited downside risk for the security, as this forms a very solid support zone for Northland, and it has already supported a trend reversal for the security. And these parameters additionally also confirm that the prospects for a trend reversal over the short to medium term remains very promising.